the objectives. So the first part, as was indicated in emails you received, is going to be presented by Margie Creel. She's our senior auditor that we hired to do our fiscal desk reviews, and she's also providing some other very valuable financial related assistance to Serve Wisconsin. And then we have some miscellaneous fiscal matters that we'll take a look at after Margie completes her presentation. So Margie, if you want to go ahead with your part of it, and also as it noted there, if you have any questions, you can type them in the chat box and we'll address them as they come up there. Go ahead.
Okay, thank you, Stephen. My part, good morning, or good afternoon. This is Margie Creel, and I'm a senior auditor with Serve Wisconsin, and I've been here for just a short time. And I'm going to do just the segment on financial desk review, which is a part of the Serve Wisconsin's monitoring plan for AmeriCorps subgrantees. So a little bit about me. I was an internal auditor with the Wisconsin Department of Health Services for pretty much all of my career spent in health services, 36 years, and I'm retired. So I have a range of internal audit and program audit experience, but pretty much confined to the Department of Health Services. So in May of this year, I started as an LTE with Serve Wisconsin, and I'm doing the financial desk review part. We're starting with the 2014-15 grant cycle and some of the 2015-16 grants. Previously to my coming on board as a LTE, this service for desk reviews was contracted out to an accounting firm. So that's the change that was previously done behind the scenes. Now I'm actually with the office staff doing the desk reviews. So maybe a little background on just what is a financial desk review. You can see up here on the slide that it's an analytical process that uses documents for its data. And in this case, it's fiscal data. So that's how the term financial comes into play. And a financial desk review is just one method or tool available to monitor subgrantee compliance with rules, regulations, and requirements. Financial desk review has been identified in the Serve Wisconsin monitoring plan for AmeriCorps subgrantees. And in terms of who gets selected for a financial desk review, the plan calls for new programs to be desk reviewed and approximately 1/3 of each year's existing costs or reimbursement programs. This next slide is just a quick list of some of the methods for monitoring, just so that it can kind of put this in perspective for you as to what a desk review is. A desk review is one method, and it's usually office-based, so I'm here in the AmeriCorps Serve Wisconsin office. It can be a financial desk review, or it can be a programmatic desk review. In my case, I'll be doing the financial piece. Other methods for monitoring are to actually conduct an on-site monitoring visit. Your program officers would be doing that piece. And other methods would be just sort of the miscellaneous wide range of using phone calls, emails, financial reports, trainings, technical assistance. So just to give you a little idea. In terms of the monitoring plan, Serve Wisconsin had to identify how they were going to monitor their subrecipients And again, one of the methods or tools that they're going to use is the financial desk review. So that's how I fit into the picture. But why should we do financial monitoring? What's the purpose? Well, basically, it's intended to help ensure compliance with rules, regulations, requirements, and to safeguard federal funds against fraud, waste, and abuse. Financial monitoring should help identify actual or potential issues. It also could identify whether there's any technical assistance or training needed on the part of the sub-grantees or elsewhere. And it can ensure that there is follow-up on any issues or corrective action plans that might be needed. And so within the realm of financial monitoring, what kinds of things or key review areas might we be looking at within the scope of financial monitoring? Some of these are accomplished up front when you make an application for your grant, your program, and it's reviewed and assessed and determined to be an award. So the evaluation of the financial accounting system, that it's adequate generally, has accepted principles, some of that may take place at the beginning. You know, financial monitoring is looking that there's an awareness of the award and regulatory requirements. It'll also take a look at your grant policies and procedures and find out if you have written policies and procedures, are you following them? And then there's some examples listed there of what type procedures your organization would include or have. One key thing, and more emphasis is being placed on this as the federal regulations change, is that there's adequate internal control and separation of duties. Internal controls the procedures need to be written, they need to be adequate to accomplish the control, and they need to be followed. And so there's an evaluation that goes on up front as to whether or not you have adequate separation of duties. During the course of the desk review, I might look into that as well. It just depends. Another key area is on the expenditure side, that expenditures are appropriately documented, recorded, allocated, allowable, and they would support the reimbursement request on your PER. We might, during the financial review, we might look at personnel time and activities, that they're appropriately documented and allocated. And in terms of match, there may be a review of cash or in-kind as applicable. Again, that's appropriately documented, recorded, and allocable. In terms of financial reports, we might look at both internal and external reporting, but mainly for the financial end, it would be the accounting records and what is being recorded on the books of the agency. Some participant files might be involved, although that's probably more on the program side. But the key thing, one of the keys, is the source documentation, and that it needs to be clear, retained, and provide a sufficient audit trail. And then here listed on this slide is also A133 and other audit reports. The requirements for audit report has recently been modified, and the thresholds have been raised. I'm not sure how many of your agencies have huge programs, but the federal dollar threshold is now up to $750,000. So that means that if your agency has federal dollars, not only in AmeriCorps programs, but any other federal program, and it totals $750,000 or more, you'll need to have an A133 independent audit. And of course, there could be other reports, emails, or correspondence that might be involved in the review. So how will you know if your grant is going to receive a financial desk review? Well, Serve Wisconsin does the planning for that, and they select the programs. Yeah, but they'll work with your agency, and they'll be sending you a document that looks similar to this slide, with a list of financial documents that you will need to make copies of and send in for our review. And primarily, it's the general ledger that would be that document the income and expense for the AmeriCorps program. We'll send you this with a specific time period that we'll be looking at. The general ledger is typically the books of accounts that in your financial system. You might have a software that records your expenditures, or you may be doing your books manually, but we'll be looking for the general ledger accounts that document income and expense for a particular time. And the next item I just wanted to point out, you may not be familiar with that term, but a bridge or supporting documentation that shows the general ledger documents to the PER. And that's exactly what it says. It's a bridge. So if on your general ledger or your bookkeeping system, your revenues and expenditures do not match 100% to the monthly report that you have for on your PER, then we'd be looking for another document that would show what adjustments might there be. Why did your books not totally support all of the expenditures or revenue claimed on them per? So the bridge can sometimes be just a reconciling items with an explanation or a list of accounts. One that comes to mind might be indirect costs. Maybe your agency allocates indirect costs quarterly, but you report a portion of it monthly. That would be a reconciling item on the bridge schedule. And then other items that we might look to review would be member payroll registers, and we'll supply a list of which members we're looking for and what time period, so you'll know who those are. We'll be looking for the beginning and ending payroll dates for enrolled members and exited members. In terms of staff, we'll also be looking for the payroll registers for staff that'll show the gross amount paid, the fringe benefit amounts paid for that staff member, and how that is claimed or translates to the monthly PER. We look for the liability insurance certificate to make sure that your agency staff and members are covered. And then the last item could be a miscellaneous that, depending upon your program and what issues may have been there in the past or what particular interest we're looking for, there could be other fiscal documents that we would ask for. One thing that comes to mind would be an updated copy of your policy and procedures specific to timesheets and time reporting, timekeeping. What are the procedures at your agency, and what do you require your staff and members to do? In terms of just an overall general document review, when I'm looking at that information, I'm looking for these high-level aspects of is the documentation appropriate? Is it accurate? Does it look like it's timely? Do I see the expected content or format? Does it look like expenditures have been approved, that someone is reviewing and approving that cost or income? And if there are any other specific or current or frequent issues that are of interest, I might be looking for that. And if I I may also be looking to see whether there's any additional follow-up monitoring needed. So we've contacted your agency, and we indicate that your program is going to have a financial desk review. We sent you that list of documents. You sent it back to us and said, here's what we have. Now what? What's next? Well, actually, I'll be looking at all of those things from the financial desk review part, and I may have additional documentation requests, or I may have need a clarification. It's sometimes difficult because everybody's financial system could be a little different. You may all use a different software. You may have different requirements from your agency's aspect. So sometimes it takes a little just becoming familiar with the books and what your agency's using. So I may need to actually call you or send an email asking for clarification. So if you see one from Marjorie Cryle, that's me, and I'm just following up and trying to clarify or get some additional information that's needed to resolve a question I might have. So the desk review, basically, you know, I've taken all that information and evaluating it and reaching a conclusion. And if at the end of the process, I will be writing a letter to your agency and communicating any desk review findings. It'll either say, I found nothing, your books look like they're in good shape, or I may have a specific issue that you'll need to address. Sometimes the issue may involve a corrective action plan or some sort of adjustment for a question cost, perhaps, but that'll be in this letter. So you'll know whether where you're at any one particular point in time when you get the final conclusion letter and follow up to the desk audit.
I would just add, sorry, excuse me, Margie, I would just add that as with programmatic monitoring, if there's an expense that's identified that is not allowable, that expense can be disallowed. We did already have Margie identified with one of our programs a timesheet, staff timesheet that was completely missing, so there was no documentation for that expense. So an amount that came to under $500 was disallowed for that program.
Yes, thank you for the clarification. On slide 13, starting here and for the next several slides, I've just listed, I'm calling them potential issues. It's sort of like this is my offering of heads up on issues that either could come about or may result from the review. Not every one of them, of course, will, but it's sort of like a list, not necessarily all-inclusive, but a list of things that might pop out from the desk review and of potential issues that others may have had in the past. And in terms of like budgets and reports, sometimes there's a difference between your financial reports and the accounting records. And if they don't track back to your accounting records or doesn't reconcile, that's an issue, that's a problem, and we'll have to, you know, deal with the circumstance at hand. But your accounting records need to support your expenditure and revenue claim. Sometimes costs are included or that are not in your approved budget. I mean, that would be an issue. Or if there were duplicate costs submitted. If your agency's not doing a periodic budgeted to actual comparison, or there's a huge variance in your budget to actual expenditure claims, that too could be an issue depending upon the nature of the situation there. Stephen just mentioned, the question or unallowable costs. If a cost clearly does not meet the documentation standards and the requirements for applicability, allowability, authorized, all of those elements that fit into the definition of a document, adequately documented cost, it could be questioned or unallowed. And then there's a brief list there of some issues that reasons why a cost might be disallowed or questioned. In terms of expenditures, again, expenditures need to be properly documented, they need to be recorded, and they need to be tracked. And if any one of those issues is not adequate, there could be a finding. On the next slide, just under the travel, contractor, and consulting costs, one reason something could be questioned might be that the contractor or consultant cost is not justified or supported, or the reimbursement seems inappropriate for some reason, or it wasn't in your budget. One of the requirements in the accounting system is that costs are adequately separated. And if the direct and administrative costs are not adequately separated by the grant or by the grant year, that too could be an issue for a finding. And then in terms of administrative costs, whether or not your total claim exceeds 5% administrative costs, if it's charged to the program costs versus administrative, and then in the case of indirect, that they're charged at unapproved, outdated, or inappropriate rates. So I believe in your budgeting you do identify what you'll be budgeting for your administrative costs and your indirect share, and we'll be looking at the budget to see how that matches up. In terms of the accounting system, most of this, of course, is done up front, but I may find something in looking at your documentation that entries, transactions, or amounts might not be supported by source documentation, or may not have been appropriately approved, and we're looking for the accounting system to do that, to capture that information. In terms of audit reports, this probably applies only to very large agencies, but if you have, again, $750,000 or more in federal funding, or you subgrant to someone, and those audits, then an A133 audit is required and must be tracked, received, and reviewed. Issues could come about from noncompliance with federal rules, regulations, or requirements, perhaps specific grant requirements and provisions, or there's noncompliance with your own policies and procedures. We had recently had an entity that that was the exact finding. Their policy and procedures said on timesheets that they would sign, the employees would sign and date their timesheets, and there were no signatures or dates on the timesheets. So, and their own, the agency's policy and procedure indicated that they would be signed, which most everyone's would. So that's an example of a non-compliance issue. In terms of system controls, separation of duties, and internal controls, this one, if your agency were audited, it's not uncommon for small agencies to have a separation of duties finding from their audit firm that the separation is inadequate, that there are inadequate internal controls, but then in that case we'd need probably a corrective action plan. What compensating controls are you putting in at your agency in order to address those weaknesses or inadequate internal controls. So another area that could be at issue is whether or not your agency is performing reconciliations on a timely basis, and that would probably include your bank reconciliations and reconciliations of your accounting records to your PERs where you claim expenditures for reimbursement. This next slide just has some specifics related to personnel costs. The one I just mentioned, the staff timesheets are not signed or certified by the individual or approved by a supervisor. Staff time may not be properly documented and allocated. Charges or costs on actual or after the fact records, but not on budget or pre-established amounts or percentages. And timesheets that may not comply with OMB or the Federal Code of Regulation cost principles. In terms of match, there's a list of some of the items that might fall out for finding of in the match area, either cash or in kind, that there's a shortfall, there's not, source isn't identified, it's not properly documented, recorded, or tracked, and so on.
So this is a good place to step in, and we had an inquiry from a program that's doing a little bit more in the in-kind match area. So they were looking for an overview on the kind of the documentation required. It's similar to all other expenses, AmeriCorps expenses, and that adequate documentation is necessary. So I can give you a few examples. For example, office space. The agency should have a system or formula for calculating the value of office space. So you just have to document what that system or formula is and how you're allocating that cost to the space that the AmeriCorps member is using. Similarly, for things like telephone and computer technology costs that are allocable to an AmeriCorps member, you should have those costs determined on an agency-wide basis and then allocate those costs to whatever the resources the AmeriCorps member is using. And another example would be if you're using an in-kind trainer, you would need documentation from that trainer, either an hourly rate or an event or daily rate that that person would normally charge, and that person provided those services for free, and then with that documentation you could record that as in-kind match as well. So did you have anything to add to that, Margie?
No, I think you hit on some pertinent examples there of what might be a match-related issue and what things compose that. And just moving on then quickly, in terms of issues related to financial reports can be many things. They can be expense, they can be reimbursement requests, they can be year-to-date, budget to actual, but there could be issues related to the reports if they're delinquent or not being submitted timely, they're inaccurate, math errors or mistakes from a previous period or revisions that do not get made, or if your reports might disclose something that doesn't reconcile or track back to the accounting records. One thing to make sure that you're watching for and not reporting is that you're reporting and claiming budget rather than actual expenditures. Sometimes this seems to be a difficult area, but the claims need to be for actual expenditures. So it's not sufficient to claim your budget amount. You need to have the backup to show the actual expenditures. It's not permissible to claim 1/12 of the year's budget on any one particular PER. So just in terms of budgeting, budget is important and you need to have a budget, but you also need to report actual expenditures. And then this is just sort of a missing list of, excuse me, a miscellaneous list of other issues related to service and or staff timesheets. And again, we missing incomplete or improper timesheets that aren't signed or dated by the participant and the supervisor, showing that the supervisor reviewed and approved the time, or that there's improper living allowances and excessive payments made on an hourly basis, or that the person was paid after they exited in the terms of for a member. Sometimes there may be a misapplication of FICA, or the fringe benefits aren't being remitted in accordance with state and federal requirements. And then that total hours, that last one is just that the 20% of total hours spent on training educational activities for AmeriCorps only. If it were exceeded, that may be an issue or finding. But so summing up, one of the key areas is documentation and the quality of your documentation. You need documentation for systems, policies, and procedures, and documentation supports all financial transactions and entries. And there is a common problem list with documentation. Does it support the charge or transaction? If it's missing, if it's inadequate, it's improper, or the records and files are not being retained in accordance with records retention policies. So I've listed a few additional resources if you'd like to know more about the financial management piece. There's a link there to the National Service Knowledge Web. Much of the information that I presented you with today comes from that second link of slides at a previous federal presentation. And of course, for Serve Wisconsin's own website, they have produced a section for monitoring tools, and you'll find that under the Program Resources link at the bottom of your slide. So are there any questions at this point on the material that I've presented? Or maybe you'll have a question later on, you'd like to submit it, that's fine. But I'd entertain any at this point.
Hi Margie, this is Casey Sweeney here. No questions coming in at this time. There is one that relates to the 10% and budget modifications, so we'll probably hold that for Stephen.
Okay. Okay.
But we'll get.
Well, yeah, and then just to sum up this this slide, I'm the senior auditor. There's my contact information. I am only here part-time, so I would encourage you to respond to me if I contact you by email or phone, but just to know up front that I'm only here on a part-time basis, and if it's something that's urgent, you be sure to include your program officer on any emails or phone calls as needed if you can't get hold of myself. But you'll know if I have a request out for additional information, I'll send it directly. So I guess that there's no other questions. That kind of wraps up my portion, and Stephen has a little bit to do on the other information topics that we had for you. So thank you very much.
Thank you very much, Margie. So just a few things to go over here. First of all, budgets, as in all program years, budgets are due in encore within 30 days of the program's start date. We've had several programs that did not meet that deadline this year, so if you have not yet submitted your budget in encore, you should do so as soon as possible. So the next one is related to budget modification requests that Casey just mentioned. And if we can get my screen up here. I have a PER example. And Casey, is that visible there?
Good.
Okay. So first thing is, and with the contract documents you receive every year, there are budget modification guidelines. And the basic guideline is if your modifications exceed 10% of your overall total budget, you have to come to Serve Wisconsin with a request for a budget modification. So let's first go to that. What is the 10% figure calculated on? So it would be your overall total budget, grantee share and match share. And the PER has a nice little calculation here. If you'd prefer to look down here, that's the 10% of budget amount is right there. So in this case, if this program had more than $50,407.80 in changes in their expenditures, they'd have to come to Serve Wisconsin with a budget modification request. And what we're looking at when we determine the amount, if that amount of modifications exceeds the 10%, we're looking at the major budget lines. So A, B. For C, it would not be these subtotals, staff travel, member travel, it would be the overall travel subtotal. D, E, F, again, G3 for the training, not the sublevels, but the overall subtotal, HI, and then the entire living allowance section, K, X, and then the entire member support section, L. So basically we look in these, the budget versus year-to-date actual columns. An easy way to determine if it's 10% or more is add up the amounts that are negative amounts in these columns. They're always going to be positive until you've exceeded the expenditures that were budgeted for that any particular line. So this is a September PER, so there aren't any, well, there's actually a negative amount here. So they already overspent in this column, but it was in the living allowance section, so we're looking at a net here. So the net, there's no negative amount in the net for that section. But if, for example, this had been in one of the lines above here, we would start adding those negative amounts. And if they got to the above the 50,407.80 figure, then the program would know that if they anticipated expenditures over or modifications over that 50,000, they'd have to come to Serve Wisconsin with a request for a budget modification, and they'd have to have that approved before they could exceed that level of modifications. And there are detailed instructions in the budget modification guidelines on what exactly you would need to include in your budget modification request to Serve Wisconsin. And there are circumstances when you submit a request to Serve Wisconsin and Serve Wisconsin approves it, but it may still need approval from the Corporation for National Community Service. And we would let you know if that has to happen, and we would let you know when you received all of the approvals that you need in order to proceed. And at that point, we would give you permission to submit a budget modification request in Encore. So any questions about that?
Hi, Paul. I see that you had your hand raised. It appears you have a question for Stephen. If you would like to ask that now, you can do so verbally. So Paul's question, he asked it by text now. It says, so for example, if A budget, like an example A, versus actuals was 26,000 and B budget actuals was 26,000 negative, combined they would be 52,000. So that combined amount is what we need to look at, or the 26,000.
So it would be any portion where any line, individual line, you would add up the individual lines where there was expenditures that would exceed the budgeted amount. So there's no, and then you would add it up as an overall or aggregate amount. Does that answer the question?
Paul, you are unmuted. Any other questions can come through the chat box. Paul is referring back into the PER once again. He says in the PER, if column A is negative 26,000 and column B is negative 26,000. Does that require a budget modification?
Is it a column or a line would be the question, I guess. Because A and B are line letters.
He responds line.
Okay. So if it doesn't make any difference, they don't net each other out. So if you had a positive, if you still had a positive 26,000 in the line A in the budget versus year-to-date actual, but you had a negative 26,000 in the B, it would only be 26,000 towards your 10%. If they were both 26,000, then you would add them both together, and it would be 52,000 that would be going towards your 10%.
I am not seeing any other questions at this time. As a reminder, this webinar is being recorded, and the slides will be posted afterwards as well, along with the recording.
Okay, there are a couple more items we wanted to discuss. One is program income. So program income, for those who aren't familiar with it, is income that the program receives from program operations that is other than funds that are used for program match. For example, if you charge a host site a fee to participate or have an AmeriCorps member, and that fee exceeds the amount that you needed for match, then the amount that exceeds would be the program income. And it's important to, it works easiest if programs do not have program income, because that affects, that has an impact on whether or not you should have used corporation funds or not to fund part of your programming. We recently had a program that had to pay $94,000 to the corporation because they had collected that much in fees over a period of years from their host sites that had not been used toward match. So it's important that that you pay attention to any fees or income that you are receiving towards your AmeriCorps program. This does not apply to overall agency fees. For example, we have a program that charges service fees for their overall agency programming, which is much larger than the AmeriCorps program. So those fees don't count towards program income because they're funding the larger agency operations. And then the last item on the list is about the Wisconsin Department of Justice and their new criminal history online system and a new invoicing system that they have. I heard from a couple program directors that they are getting invoices that no longer itemize the individuals for whom checks are being completed. It's just one invoice for a aggregate or overall total amount that's being invoiced, and there's no documentation of who the checks are for. My recommendation for that is that programs contact whatever section or person that those invoices are coming from and ask the Department of Justice for detailed or itemized listings of who the checks are being conducted for that they're billing for, because they certainly would have to have that backup data to be able to produce the invoices they are sending out. So that's the conclusion of what we have. We'll just give a couple more minutes for any questions that come in. And of course, you can always contact your Serve Wisconsin program officer, or as Margie said, you can contact her with any financial desk review or other fiscal questions. So thank you for all of you for participating in our webinar, and stay tuned for information on webinars for future months.